So you continue as the accountant to have to be the non-fun guy. You have to bring up all the detailed expenses that entrepreneurs need to think about.
No fun at all.
Yeah. Now, term number 9 here, we're talking about the accounting period. This refers to the amount of time for which financial information is being tracked. Walk me through what that means in layman's terms.
Well, the accounting period is the period that's covered by the income statement, typically. Preferably, you're looking at your monthly accounting period and seeing your results of operations for the month. You probably should be comparing that to the month from the year before.
Okay.
You probably also want to be looking at the year-to-date accounting period, say the first 6 months, through June 30, and again comparing that to the prior 6-month period.
So if you're talking to your accountant and he says, he mentions the word accounting period, hopefully you're not going to be able to anymore. What are some common mistakes people make when they get into their accounting period? Do they kind of every month make it a little different, or do they change things around to make the numbers look better sometimes, or do they get...
I suppose that's possible, although I don't see that a lot with the advent of the accounting software. It kind of locks you into your reporting periods. Some businesses might make a mistake on on choosing their tax year end. That type of thing. Although most businesses anymore are dictated under Internal Revenue Code regulations to use a December year end. But I really don't think it's so important what your year end is, as long as you're tracking and when you're comparing, this month and this period to the previous period. I see that as being a big mistake or a big tool that entrepreneurs don't take advantage of. They tend to just look at, here's my profit and loss for the last 6 months. It looks good, there's money on the bottom line. They don't compare it to the 6 months a year ago and see that sales are actually trending down, cost of goods sold are actually trending up, selling general administrative is up 10%. And over time, that can create problems, of course.
Now, how often do you recommend someone meets with their accountant so that they can detect these trends? Is monthly a good idea? Would you
Probably
advise?
Quarterly.
Quarterly?
I think there should be some initial counseling and training. Ideally, the entrepreneur would learn to do this on their own, and therefore they wouldn't have to go to their accountant unless there was something they didn't understand about their analysis. But I would think a good accountant would attempt to train their client to do some of this analysis themselves, and then maybe meet periodically with their accountant to just make sure they're interpreting it correctly and that type of thing.
How much time should an entrepreneur be devoting to looking at their numbers each month?
Well, that would vary a tremendous amount by the size and type of the business, but they should at a minimum be studying those financials, even for the simplest of businesses. One thing is they should do it every month.
Every month.
Not once a year or when they get something back from their CPA. Maybe that's too late, of course. So in order to spot trends and identify problems before they get to be a larger problem, you need to be looking at it monthly. Maybe you could look at your financials, and it might take you 4 hours to analyze it. Mine may be very simple, and I can look at it in 30 minutes. So I don't think you can say, I think it's just whatever time is required to get a thorough understanding. And if you can't do it on your own, then seek help from your accountant.
But at least every month?
A minimum every month.
Okay. Just want to make sure you're hearing that. If you're watching this and you're going, I haven't looked at my numbers in a while, that's a bad deal. We want to just look at it each month at least, get in there, do a deep dive, know what's going on, so that way you don't get behind the 8 ball and find yourself in a bad situation there.
That's correct. And a lot of entrepreneurs say, well, I've got money in the bank, I don't need to worry about my numbers. But that, of course, obviously isn't true, because even though there's money in the bank, there could be liabilities piling up
somewhere else
that are more than the money in the bank. Good example, your deposit for future services. Even though you've got money in the bank, if you collected that $4,000 deposit for future services and immediately spend it on a new car, then you've got to do an event in the future that for which you won't have any more revenue or less revenue coming in. So that's a good example of how just looking at the money in the bank can be very deceiving.
Yeah, absolutely. Especially if you're an entrepreneur and you're watching this and you're saying to yourself, man, I have no idea how important this is. Don't feel like you're lost. Don't feel like there's no hope. We just need to find a good bookkeeper or a good accountant and have the diligence to monthly look at these numbers.